Hello, this is the Chart Profit video. Just over an hour into the trading day on Friday 23rd of September. Looking here at the pre-open from today. Looking at the E-mini S&P December contract from last week. This profile here is Thursday, and this level here is 21.42.25. We have identified as resistance on this chart, now support. So Thursday the 15th there was an attempted probe above it, rejected. On Monday there was an attempted probe above it, rejected, and on Tuesday, again early in the session on Wednesday here, we declined to test 21.35 about here, which was the minor point of control. That was rejected, and then following the Fed statement, this resistance, this half range resistance was overcome. We actually marked aggressive buying, green at top here on Wednesday, and we have consolidated that on Thursday, a higher, albeit narrower, value area here. Now said, as long as we hold above this half range, in fact we could identify that level there, 21.35, the minor point of control, as long as we stay above that level. In the short term we are in strong price location, and 20.87 is the major point of control support. Technically on the pulse chart, we'll look at in a second, the price oscillator is ticking up, although it's still negative. Same for Russell 2000 and the Dow, the Diamonds ETF. Breadth on the pulse chart has turned from red to neutral, so we'd like to see that confirm. But technically, we're just looking for confirmation of this much better price location above that level. Here's the live chart, actually a 5-minute, and you can see very clearly 21.42.50, that half range, and these little probes above it for the last few days, and then the spike above it as the news related rally took us above there. So let's hope we can consolidate above this level. Have a quick look at the breadth I was talking about from the pulse chart. Starts here, these bottom two indicators. The percentage stocks greater than the 50-day moving average for New York has actually just managed to move above 50, which is good. And the net new high is 25. The 5-day moving average here not quite above zero. So that gives us a neutral from red here on the breadth part of the pulse chart. The other mild positives are the fact that the price oscillator on momentum is ticking up here, still negative but ticking higher, and obviously we've held this major support on the spider, and we had reactive buying here, that little arrow, and aggressive buying here, the green bar. Looks quite similar to the situation back in late June, early July. Which is encouraging, so hopefully we'll see some further significant buying on the profile. Then we could reasonably look at the possibility of a breakout here. Obviously if we see price back under 209.90 on the spider, that would be a big negative, but let's just watch this pulse chart and hopefully we'll see some emerging green on this chart. This is the live chart for the spider, just off a little tiny bit here. 218.37 is the 3-month, that's resistance above here, so price above that would be a real further positive for this chart. Looking here at the Russell 2000 ETF IWM, we had a minor point of control here. This week it's migrated higher, it's more important, it's a 5-month point of control, so 122.65 is now the first level support on the IWM. And for this move off the February low, we're actually breaking out here just to a new high. So price consolidating above that level would be a good sign. On the diamonds chart, 185 dead. This level here is resistance. That's now the 5-month point of control resistance. Price above that would be a big encouragement. Currently price is just toying with this half range, minor half range here. At least price above that level would be a minor positive to look for by the end of this week. Just printing a little bit below that right now. Qs are the relative outperformer, tech doing very well at the moment. The major down here, the 4-month point of control, that's the first level support, 116.97 for this chart. UK FTSE 100 index, we're looking at the 4-month, that's the first level support here at 67.23. As long as price holds above that level, it's in a strong price location. Okay, the DAX, the German DAX, remains an interesting chart. The major point of control is at 97.50, And the 3-year value area high, because this point of control has yet to migrate, remains at 10,742, and we can see that the chart, as it will often do, is finding a problem with that. If this major migrated higher, as I've said before, it would lift that value area high, and that resistance would kind of disappear from the chart. But currently the DAX is quite an important chart to follow. We're actually printing above the half range, the important half range of last year's high, but we are still having a problem with that value area high. Before we move on to the bonds and the currencies, etc., I'll be looking here at the sentiment data. 7-month high for the ratio. We're looking here at the Ridex, my version of the Ridex assets ratio, and 7-month high came in at this point, which corresponded quite nicely to about this point here at the top of the market. We've had a little correction here in the S&P, and actually the ratio has fallen even better on yesterday's big up day. On Wednesday's big up day, the ratio came lower. If the market keeps rallying, we need to now watch this level here. Some indices breaking out to new highs can attract a lot of attention. Could see the public piling back in, and that would be an important level to watch. This is the bull fund assets in isolation. You can see they've come off a little bit here. This blue line actually historically over the last few years representing a level where if we see the bull fund assets falling below that level, we usually see market rallying back. We're not too far above that level, so that's kind of interesting from the opposite side of the coin. Bear fund assets also, unfortunately, close to a really low level that has tended to bring in the highs. We've rallied a little bit from there, but not much. This is the public poll from AAII. Bulls percent lower at 24.8 this week, bears percent higher at 38.3. Black line there representing a 4-week moving average of the net, the bulls minus the bears. You can see that in July at this point here it got a little excessive, broke above the previous peak, sending that to the net, or the 4-week moving average of net, to a multi-month high. We are in a situation now where, should the market consolidate or even sell off, we may see that moving average actually dip below the previous low back in May, and that would be a bullish indication. Right now we're kind of neutral. This week, somewhat unusually, the investors' intelligence has kind of mirrored the public poll with a lower bulls percentage, 44.6, and bears percentage was actually higher, so similar to the public poll. This is a chart from last week. This actually shows the exposure index, the equity money manager's current equity position, and from this chart, as I say, from last week, and it was down quite sharply week through the 16th, in fact just slightly more than 24%. So I went back and identified the points that happened on this chart previously, on this weekly chart, and they tended to be more like the market lows than anything else. Again, a contrarian indicator. We're hoping that will play out and we'll see the market bounce here. This is actually what the exposure index looks like this week, slightly higher at 79.31, up from that 68.55. Lastly, we look at the Lipper US fund flows. They reported equity fund, including ETF, outflows this week of a negative 3.4 billion. So it's an outflow this week, 3.4 billion in the week to the 21st. Just noted here that 9 out of the last 10 weeks have actually shown a net outflow. You can see that on the chart on the right here with these red histograms, bars below zero, and there's the single inflow week. Again, I run a 4-week flow here in black. That hasn't been in positive territory all year, reaching an extreme low over here. That's kind of neutral, but I'm watching this level here, which was the April low for this indicator. Okay, back with the live charts. We're looking at TLT, the T-bond ETF. I keep mentioning in the pre-open about the weak pattern, and I say see previous analysis. And basically it was from the top to the first low here, and then we were watching over a period of weeks the retracement here throughout part of July and throughout August, and these rejected attempts here at that halfway point. Saw something similar earlier with the E-mini where we actually managed to overcome that level, but TLT actually at that point gave up. on any more attempts at that level, and we saw a rejection, quite a sharp rejection. And with the new low here that we've just seen this month, brings the halfway point down to here at 138.30, so that's first level resistance, and then just above that level at 139 we have the 4-month. So this now being quite an area of resistance for this chart, and personally I think safety would say you want to see TLT printing about 139.50 before looking at new longs. Whether this is a long-term sea change for bonds here, but it did fail the first test, which was that rejection in there from the halfway point, and we've now got a new halfway point. So a bear market has a tendency off the ultimate high to find resistance at those halfway points, so we will watch that and the point of control resistance with interest. Okay, this is Gld the Gold Etf. I've said last 2 or 3 webcasts that the chart looks bizarrely similar to the DAX. The 3-year value area high is at 129.94, and that caused the problem here and here related to this major point of control at 118.22. And I've said that if that actually did shift higher up into this area here somewhere, then that value area high would lift. And I thought we might see that, but actually checking again today, that has not. This major remains at 118.22. That may change over the next few days, and I'm monitoring it closely, but currently it has not migrated, and just right now we're getting a little resistance off that halfway point from the top. So price consolidating in here somewhere, and this point of control coming higher might give us another leg up for gold, but until we see that happen, especially if gold remains below that halfway point around 128, can't anticipate that happening. This is USO, the oil fund ETF. The major remains at 1078, and that is resistance on this chart. And currently on this chart, the support is here, and we've seen support here twice, once late in August and again here this month, and that's the halfway point of the February low. Price up here, consolidating print in time, above 1078 would be bullish for this chart. And yet another chart having a problem with the obvious halfway points is the dollar index, which is here and here. So off this important high for the index to the May low, it comes in here. Just over the last few days for the index, we've seen support here at 94.78, which is the 2-year point of control, and we're getting resistance here. So a lot of these charts that we've just seen kind of winding between these 2 major levels, and I'm suggesting a breakout to the downside below that level or to the upside above that halfway point will probably dictate or anticipate the next directional move for this chart for the dollar. So we'll look for evidence here. This is the Euro FX chart, and that's actually found support here at the 4-year point of control, 111.65. All these levels are monitored and reported in the pre-open each day. There's a halfway point here, which is from this important low over here. Currently this chart in a strong position. If we see a breakdown here, that would endorse the idea that the dollar's moving higher. And finally we end with the pound dollar, this being the Brexit situation over here, and from this low to this high we're looking at the price action within that range. We've been watching really been sampling this on a 5-minute basis, and following this minor point of control, and that moved to 131.88 in here. That was late last week. The pound dollar now printing below that level and actually below the halfway point as well, a little lower here. So this chart is now back in a really weak price location. I mean, the first resistance is that halfway point, and we're printing close to the low of the week here. It does look like a retest sort of situation down to this low. Seeing weakness for the pound in 1 or 2 other charts as well. Okay, that concludes the video. Thank you for watching, and I wish you a good weekend.